Today, we're going to skip the dry textbooks and dive straight into the world of trading legends. We're talking about 4 people who pulled off returns that honestly, well, they just don't seem real.
I mean, look at this question. It sounds completely made up, right? Like a lottery ticket fantasy. But what if I told you somebody actually did this in the stock market, and it was verified? That's just one of the wild stories we're about to get into.
All right, let's do this. We're going to walk through the journeys of 4 absolute outliers, people whose results seem flat out impossible. And we're starting with a guy who went from cleaning pools to conquering Wall Street.
Meet Dan Zanger. By day, yeah, he was a pool contractor in Beverly Hills. But by night, this high school dropout had a complete, all-consuming obsession. He'd pore over thousands upon thousands of stock charts for years.
Now check out this timeline, because the most important part is right at the beginning. See that? 6 years. 6 years of just studying charts before he really got in the game. This was not a lucky guess. When he finally sold his Porsche for a little over 10 grand to start trading, it was right as the dot-com bubble was getting insane. It was the perfect storm he had spent years preparing for. And here's what happened. In just 18 months, he turned that Porsche money into a mind-blowing $42 million. The return was so crazy that Fortune magazine actually had to audit his tax returns just to prove it was real.
Okay, our next legend is a bit of a mystery man from Japan. He's known online only as BNF. He got his start as a university student, just trading with a small chunk of cash he'd saved up from part-time jobs.
So BNF's rise was incredibly fast, but one single day in 2005 made him an absolute legend. A trader at a massive investment bank made a fat finger error, a catastrophic typo. He meant to sell shares for 610,000 yen each, but instead, he offered them for just 1 yen. BNF spotted it in seconds. He bought as much as he possibly could and then flipped it when the price snapped back. The result? A cool $17 million in 10 minutes. Just think about that. By 2008, he was worth over $150 million, but he famously kept living his simple life, eating cup noodles while trading out of his bedroom. Let's jump to a more recent story. This is Christian Kulamagi. He started out as a security guard in Sweden and taught himself everything he knows about trading from the internet. He's become this huge icon for the new generation of traders.
But his path was anything but easy. He calls his early years the pain years because he blew up his account and lost his savings over and over again. As you can see, it took a long time to figure out his strategy. But once he did, he was perfectly positioned for the absolute market madness that happened after the pandemic hit.
And the result? He blew past the $100 million mark in net worth. And you know how we know it's real? Tax records in Sweden are public, so his incredible gains and the massive taxes he paid on them are all verified for anyone to see.
For our last story, we have to go all the way back to the 1950s. Nicholas Darvas was not some Wall Street insider. He was one half of the highest-paid ballroom dancing duo in the world. And get this, he built his fortune while touring the globe, managing all of his trades by sending telegrams. So while he was traveling the world, he came up with his own method called the box theory. It was basically a super simple way to track stocks, and he'd buy them when they broke out to new highs. The really important part, he completely ignored all the news, all the tips, all the opinions from Wall Street.
In just a year and a half, he spun $36,000 into more than $2 million. Now, in today's money, that's over $25 million bucks. The story was so unbelievable that Time magazine actually launched an investigation into him, assuming it had to be a hoax. It wasn't. Darvas had the brokerage slips to prove every single trade.
So these stories, they're amazing, right? They're super inspiring. But they are also incredibly dangerous if we just stop right here, because they hide a really brutal truth about the markets.
So let's hit the pause button on the legends for a second and look at the cold, hard reality. What does the actual data say about the average person's chances of pulling this off? Well, this chart pretty much says it all. Study after study after study comes to the same conclusion. About 97% of people who try to actively trade end up losing money in the long run. The number of people who are consistently profitable is tiny.
And if you break it down, it gets even more grim. A huge study in Brazil found that 97% of people who day traded for more than a year lost money. A University of California study found only 1% are predictably profitable once you factor in all the costs. So it's no surprise that 80% just give up within 2 years.
Look, the main takeaway here is that the 4 stories we just heard, they are the statistical equivalent of being struck by lightning. They are the exception, not the rule.
So that brings us to the biggest question of all. If almost everyone fails, what did these 4 guys have in common that the other 97% didn't? What was their secret sauce?
Well, it really wasn't one secret. It was more like a combination of 3 brutal requirements. First, an extreme, all-consuming obsession. Think Dan Zanger studying charts for 6 straight years. Second, they had to survive a painful, costly learning curve, like Christian Kulamagi's pain years of losing everything. And third, all that preparation had to collide with a massive opportunity. They capitalized on a perfect storm, a period of historic market momentum, like the dot-com boom or the post-pandemic craze.
Okay, so what's the final verdict here? How are we supposed to think about trading after hearing these stories, but also seeing the tough data?
I think it boils down to this. Yes, becoming a professional trader is possible, but you have to understand that the odds are pretty similar to becoming a pro athlete or a famous movie star. It's a real path, for sure, but it's only for the top 1% of the 1%.
And that leaves us with this one last thought. For almost everyone, active trading is a form of entertainment. It's a high-cost hobby. But for these 4 outliers, it was never, ever a hobby. It was a craft, a profession that demanded a level of discipline and obsession that you'd expect from a brain surgeon. So the real question isn't just can you win? It's are you really willing to pay that price of admission?